This is Short Hammer. It is the 22nd of May, 2022, and this is Trading Zones. You may hear a little bit of background because there's a lot of energy and things going on today. But either way, like full house people everywhere. But I definitely wanted to get this video done. So this is looking at the 1 hour chart, looking at RTUI. I usually prefer the 4 hour and the higher time frames because I'm really, I like to figure out trend and patterns. But let's look at a lower time frame here. So looking at the 1 hour, right? Well, first of all, what we should take a peek at is on the 4 hour, and I believe we did this before. On the 4 hour. Okay, 1699. So let's jump to the daily chart. We're going to go sort of like an up and a down real quick. Okay, let me be real quick. So if you look at this daily chart, what you can see is right in here, this little pocket, when we had this flare up on, what date is this? Give you the date. Looks like about the 9th of November, right? And we broke through this area here, this top on the 20th, January 20, 18th of Feb 2020. And so over here, this is all 2020, November 2020, we sort of got through there and we pulled back, right? And then you sort of saw like this triple bottom here that occurred over the next few days. And the sort of the buyers sort of pushed us out of that. And we kind of ping ponged around between the 17, let's say 46 area roughly. What's this? No, 1749-ish area. And this lower area right here around the 1690s, right? We kind of ping ponged around for a few days. Then the next few days we went above that and we ping ponged around. Then we finally broke above that previous flare up, right? Right until it looks like it's about the 1815-ish area. So what am I saying, right? When we pull back, we drop right into that little area. And if you look at this, the candle right around that 1690s, look at this top here that went as high as what's this, like 1715-ish, then we pulled back and we went sort of chopped around in that 1690, 17, that low 1700s area. But we dipped below that and we found buyers in the 1690s and went back up. So what we want to see here is, if I'm looking at this on this bigger time frame, this daily chart, we want to get through the 1840s. That's what we want. That's where we want the buyers to take us. And then we want to squeeze and run up into the 1860s and really hang around in that area. But what's probably possible is that we could sort of ping around between the 1690s and the 1830s a little bit more, or even these 1815s a little bit more. Definitely want to get through that area. So let's go ahead and drop this down to the 30-minute or the 1 hour chart. And on the 1 hour chart, if you're looking at this, you're seeing that we want to get back first and foremost over that 1815-ish area. That's what we want to do first and foremost, right? If we're looking at the RTUI and we go back to the 12th of May, we didn't make a lower low, right? Technically, we didn't make a lower low below that. And so, yeah, but see, if you look at this trend, right? So let's say this is a low, higher high, higher low, higher high, higher low, higher high. Then this is a lower low. It's almost like a roller coaster, and this is a lower low. So we need to get over this high here, this 1800, 1801 area. We'll see how that pulls out, right? But it's almost like a roller coaster, man, when you look at this. Look at that. If you look at this area here, yeah, right into here. Yep. So that's what I'll be watching for. What do we do in the 1800s? We get through the 1815s. Then where do we go from there? We're looking at the, let's pull back into here, 1770s, want to push higher. Just where we are right now. Yeah, I'd want to crest this 1840s area and really push into the 1860s. Yeah, I'd want to get above this area here. Yeah, that's what I'd look for, 1860s, and get back up here. And this is looking at the 1 hour chart. We have to see sort of how that shakes out. But so the 1 hour chart is showing. Let's drop down to the 30-minute chart. I'm taking a while on this. Yep, 1800 to see what we can do. 1798 couldn't get through. Okay, let's move on. MES. MES, definitely a little bit more fascination here. And I'm going to jump up to the daily chart first, then come back down here to the lower time frame. And the 3967 was an area that we mentioned that we wanted to stay above. We went below it. So if we're looking over here, we see like when we get around these 39, this 3900 area, right? We see a little bit of chop, and even down to the 38, we dropped down to the 38. Was this a 38? Was it 3807? That low? And if you look across to the left, you see definitely a lot of action in here, a lot of retracements through the 38s, where we're dipping below the 38s into the 37s and into the 36s, and we're sort of struggling to get through those 3850s and to hold, and then we're struggling into the 39s, and we're going back down into the 37s. So there's a lot of chop in that area, right? So what we'd like to see, me personally, I want us to get back above 3960s. And then we got to sort of crest this little janky area here around the 4090s. 4007 is a level to watch. And then we want to get through these 4090s and get a little bit of acceleration up here. So we want to see how that shakes out. You hear my son in the background, he's having a party. We'll see how that shakes out, but that's the first thing that I would watch. If I'm dropping down to the 1 hour chart, right? I just want to crest here, 3950s. Can I get back through 3950s? And can I get some buying above that, right? That's what I want to see. So we want to see how that plays out. But if we're looking at this from a trend perspective, right? What are we seeing, right? It's a lower low here, right? So we want to see if this next thing here is a lower high than another lower low, or are we going to reverse trend and pop this and go up and then make a higher, sort of a higher high here, then a higher low, than we go. This is what we want to watch for. The last two times down around this 3856, look, buyer stepped in, reversal, buyer stepped in, reversal. So if we pull back down to the 3850s, we want to see if those buyers step in again or not. That's going to be interesting, right? So that's something interesting to see, right? Will we get a spark off this level? The last spark off this level, we went as high as, what is this? The 4000s, 4090s, almost the 4100s. So this spark, we didn't do it, and we made a lower low. So if I'm looking at this from a pattern perspective, that's a bad look, right? The last time we went to the 4000s, and this time we couldn't even get up there. And this is just, on the 1 hour chart looking back recently, right? So what I would want to see is, can we get past this high first, this 3950s, and get up here around 3958, break 3967, and can we get a squeeze back up into this area here? Because this doesn't look good if I'm looking at it. Like last time we got a spark here, we went higher. This time we got a spark, we couldn't quite get that high. That's not a good look, in my opinion, right? So we'll see how this goes. Move on over to the MNQs. And if you remember with the MNQs, we had a strong area that we mentioned, which was where? The 12500s. The 12500s are way back up here. Why did we mention that area? Let's go back to the daily chart. Now on the daily chart, 12500s is an area that right here, right? That's like the marginal line. And we get up here and the buyers get skittish and the bears get brave. And we haven't really been able to get successive bullish candles on the higher time frame above that 12,500 in quite a few days. So if I'm looking at this, until we do that, so you hear people screaming reversal, we're going up, this is the bottom. Nah, that's a subjective statement. What's the bottom mean? Does it mean that we won't go lower? Because people were saying that up here was the bottom, right? People were saying that, oh, hey man, we've bottomed out here. Time to go back up. All-time highs, baby. No. So I think we have to wait to see. All these little dips that we reversed up, everyone was screaming all-time highs. Not everyone, but a substantial amount of people were screaming all-time highs. What I'm saying is we don't quite know exactly what this market is. And I mentioned in the last video, this is a market that no one has ever seen before. If anyone tells you that, hey, we've been through this before, they're lying. Why are they lying? When is the last time that we were having a market pullback with inflation this high, with a war going on that like a lot of countries are involved in by proxy, right? And then we're having sort of a division in the world where countries like India and Egypt and Brazil and Poland and all these different countries are having to make big decisions. Saudi Arabia, what's going on with Saudi Arabia and the price of oil, and China trying to get oil off the dollar standard, like, and just this whole grind. It's a global event that's going on right now in the middle of the highest inflation ever. The Fed trying to control that. They have no idea what's going on. You got food shortages in all these different countries, the squeeze on grain. You have a baby food shortage thing going on right now. There's so much happening. And we all think that we've seen this before. The world has never been so interconnected. Supply chains have never been so interconnected, and that's being disrupted right now. We've never seen this. The real estate market is overheated. Like we've seen, I think, individual pieces and things that are kind of like what we're seeing right now, but we've never seen this. There's no policymaker that's been through this. There's no politician. There's no trader that's been through this. This is a one of one. This is a first. Maybe it'll happen again in the future, but the past times in 2008, the world wasn't this interconnected. It wasn't. Supply chains weren't so interdependent. There wasn't a war going on that had global implications like this. There wasn't. The war on terror, nothing like this, right? The war on nothing like this. This is very different. This is Europe taking side. This is a very different type of scenario in a very different situation, with two countries battling out that have such a global impact when it comes to the perspective of the world, democracy, communism, all these things, right? That people view. It's a philosophical battle. It's a global food chain battle. It's a global supply chain battle. It's a challenge, and I'm not getting into it. Been into it in previous videos, so. Bottom tops, nobody knows. Just, trade your plan and have your stop in, and you just manage your risk. If I'm watching this, we need to get back to the 12,500s. So when we hit the 12,600s, talk to me. Then I'll start to listen that maybe, the buyers have grown a pair. Till then, the bears are running the show, right? And we'll see. Even if we run up, 300 points, that means nothing. We're still stuck in this. And if you remember, right? And I'm not meaning to delve too deeply into this, right? Let's go back to the 1 month chart, right? And do you remember what I mentioned a few videos ago? That look at the 3rd of August 2020, the 1st of September 2020, the 1st of October 2020, and the November 2020. Forget the dates, just those months, right? And look how we sort of bounced around, and the low of that was, if you look at these wicks, was down here, roughly about 10,970, right? I think that's possible because we bounced around in this. Look how volatile this was. If you look how volatile this was between 10,960 and even higher than that, but I'll just 11,840. All bets are off, right? So that's a shout out to that movie. Okay, I won't even get into it. Lock, Stock, and Two Barrels. Was that Lock and Stock and Two Barrels, or was that the other one? Was that the second one? Either way, all bets are off, and so we don't know what's going to happen here, right? I didn't want to say the second movie because people may take that term out of context, so I'm leaving that alone. Brad Pitt was in that movie. It's a very interesting movie. I'll leave that alone. So just watch this, right, and see if we can get back above this little area here where you see this bouncing around, and we went all the way up, all the way down, month to month, till we finally broke out of that. So just keep an eye on that. This is the MNQ. Check that out. 2020, August, September, October, November. Really interesting. Just saying, you know. But if I'm looking at this, we do want to see more buying here. For me, just looking at this, right, we keep making lower lows. And until we come out of this tailspin, I'm not believing the bottom is in. I believe the bottom is in when the money begins to flood back into the market, and we're making higher highs week to week and higher lows week to week. That's when I believe, like, okay, the bottom may begin. But we have to have a week without making lower lows first before we start to even talk about that or have that conversation. So if I'm watching the MNQs, I want to see, do we get back into the 12,000s? And do we pop these 1298s into the 12100s? That's going to be interesting. Let's see how that works. That could happen, blink of an eye, right? But if we're looking at these patterns, we've dipped lower. Now, if we pull back off of this, that's fine, right? That's okay. But I think we need to pull back a little bit higher, right? Look at this last dip. And the last time we touched this level, look at that spark. From here, let me just do a quick line here. Everybody does these differently. I just want to just do a horizontal line here. I want that bad fella right about here. Okay. Doesn't mean anything to me. I just want that line there, right? So we hit here right around this 11,700, right? And from that area, we went all the way back up to here, 12,500s. And we tried to break, couldn't do it, came back down. We're back at the 11,700s. The pullback off of that turned into a lower low, like I was just showing you on the MES, right? So what I would want is for us to get back up here through the 12,500s and get to the 12,600s. Then we can start to talk about, okay, maybe the buyers have grown a pair. Till then, no, they haven't. That's my humble opinion, just a humble opinion, right? I'll get back to that later. So let's jump over to Amazon. Amazon. This is the 1 hour chart. First things first for me. Let's pop this up to the daily chart, see what we see. What have we seen? Okay. Definitely have buddies waiting for Amazon to get down to those 2000s, like the whole dollar 2000s, like almost 19,900, 2000s to start going in heavy. We'll see, right? And if we look at this dip here, right around this, actually, they may already be in here. I think they may already be in this 2047-ish area. It's like a breakout here. If we go back to the 13th of April, roughly 13th, 14th of April, 20 is, do we buy up more? Nice little pullback here. See, you saw this little gap up. This gapped up on beginning of January, popped up, pulled back, sold. Now we're running back through there. Let's see what happens here. That's interesting. So let's see if we get, we'll see, right? So what I would want is for this to get through this 2318 area and make a higher high. And so this will be the low here. We may have a higher, so we'd have a higher high here based on this low, then a lower, higher low, then a higher high. Then we've got some sort of a trend. We got something going. We'll see how that plays out, right? So we'll see how that plays out. This is a higher low, so we have to make a higher high here, and we may have something developing here potentially. But we have a long way to go to repair, for Amazon to repair the chart. And I think if you look at stocks like Amazon, a lot of these stocks, tech stocks, are going to get hit by the rise in interest rates. And it's not just tech stocks, it's all companies that are going to be hit by this, because you have to guide down when the Fed is raising interest rates, because people tend to spend less in a higher interest rate environment, right? And so I think you have to look kind of, you could kind of look at what people did the last time the interest rate was 5%, but you kind of don't, you can't, that's kind of not how you look at it. You have to look at what people were doing when the interest rate was 2.5 and 3%, and what's their psychological thought process as the interest rate rises. What are people thinking, right? And so far, the housing market at certain levels really hasn't been impacted. If you're in a good school district, right, and people love the neighborhood, they're buying no matter what. But right now, the price increase, I would say, month on month, may be cooling a little bit, right? And that may cool even more. A lot of like they're saying, there's a slight uptick in people that are defaulting on subprime car loans. This it's like, no, say history doesn't repeat, but it rhymes. People, this is just my thought, right? So people purchased houses because interest rates were low. Everyone that purchased those houses necessarily couldn't really afford those houses. Same problem. But they bought those houses because interest rates were low and it was cheaper to have a mortgage than it was to pay rent. The thing that gets interesting that we have to factor in, where people are saying, oh, this is a very different market in 2008. They're right. It is very different, right? But back in 2008, what was the inflation number? How much were people paying for food compared to their income? How much were people paying for diapers and formula and childcare compared to their income, right? How much were they paying how much was their car note compared to their income, right? So the rise of inflation does cause a lot of things around us to rise, which I think could be, even though it's different than 2008, the problem in 2008 was that people just couldn't afford and continue to pay for what they had, right? So the problem is going to be, are people going to run into a squeeze, not because their mortgage rates are variable and going all over the place, like it's 1,500 one day, it's 10,000 the next day, not that. But what if the ability to be able to afford food, to be able to afford all these ancillary things that you need to survive, consumer staples, what if that becomes squeezed? What are you going to choose? It's tough. So we have to see, right? We have to see. So I think it's interesting. I'm not predicting or saying anything, but I'm just saying, when people are speaking on the issue, speaking in context, I think, is more important than just speaking on data, because data without context is just a bunch of numbers. But once you put that data into context, I think it sort of changes the definition and what that data could mean, the interpretation of that data. Just my opinion. So looking at Amazon, we saw these tops here previous day. We want to get through, first of all, the 21.99 area back into the 2200s and see if we get a squeeze to the 2250s. We'll see how that works. That's what we're watching now. We don't want to make any more lows here. So we definitely want to stay above the 2050s, right? That's what we want to stay above, the 2050s. Let's keep an eye on this and see how this plays out over the next few, and we'll see, right? We will see. So what's interesting to note, right? It's so funny. So when you're looking at tech, right? It did swing low, but is it swinging lower here? No, it didn't. Amazon didn't go lower. So as we look through these different tech stocks, let's see which ones may have made a lower low than what we saw on the 12th of May. It's interesting. So let's jump on over to Microsoft. Hello, Microsoft. Okay. And so if we look back at the 12th of May, what did make a lower low? Microsoft. Fresh off that Amazon chart, we're like, it didn't go lower than the 12th of May. Microsoft did. Keep an eye on that. That's interesting, right? So does that mean that Microsoft is potentially weaker than Amazon? I don't know. But keep an eye on Amazon, because the interesting thing with Amazon is that it has exposure to a lot of different industries, because they also have Whole Foods along with their other side, which is just the products that you can get from Amazon, the Amazon.com, Amazon store. I think it's different from Whole Foods. There are different supply chain challenges and different inflationary challenges that each one of those businesses has. Also talking about Amazon Web Services. So there are a lot of different challenges I think that they may have in each one of the sectors that they operate in. And that's something to keep an eye on with Amazon. Also, their debt, do they need to borrow any money? Because even if a company has a war chest, right? How much of that war chest do they put to work to acquire new companies, or how much of that war chest do they put to work in paying for new things, right? Do they have debt they have to refinance? Would they pay off that debt? So do they have a war chest because they have debt that they've been able to get at 2% or lower rates all this time during this low interest rate area? Do they have to refinance any of that debt at a higher rate? But that cause them to guide down into the future? Are they going to feel the squeeze, right? So it's all interesting, I think. So it's all things to think about with these companies when you're digging into their numbers. See how much debt they have, and how much of that debt do they have to refinance. I think that's all interesting. So as we look at Microsoft, definitely dig into their most recent earnings and see what their guidance was, and see what those numbers look like, to see what type of pressure they may be under, or how good they may be positioned heading into their next earnings season, right? So what are they predicting? Well, did they guide up? Did they guide down? So that's interesting. But if I'm looking at Microsoft, we made a lower low here, right? And we can see that roughly from this 250 area was similar to what we saw on a lot of the other charts. Are we going to make a higher high here? Hey, little buddy, come on up. Come hang with dad and look at some charts. We're going through what we're watching this week, right? And we're sharing it. It's awesome. Okay. So what we want to see is, do we get above the 258s first of all? And can we really crest and get over these 267s? That'd be interesting. That's the area to watch. So if I'm watching this, I'm gonna watch from these where we are right now, these 251s up into the 257s, and see if we can get a little bit of juice. That will be interesting. Hey, big guy, go play your guitar while you wait for me, okay? I'll be right down. Dad's almost done. Love you, Pudding Pop. Okay. So want to see if this climbs. So that's what I'll be watching. So if I was to flip this up to the daily chart, right? And look at sort of Microsoft back in, it's funny, it's back in 2020s looking at this. This is so crazy, right? How much the market gave up. Went straight to the guitar. So smart. Boom. Okay, so we saw these tops here. We kind of went right roughly around that area, and buyers did step in. So this is just almost like we're trending up here. So we have this weird movement. 263 is interesting. So that's something to watch for. 263.15. 257 is definitely interesting. Look at that consolidation, that movement down to there. Where we are right now isn't slightly interesting, but we're above the 251.98. So that's interesting. So we'll see if we're able to get out of this little box here and how high we go. Let's go back to the 1 hour, or even better, maybe the 30-minute. But yeah, we want to see. And this is what's funny. Okay, so gap up here, then we dipped here, dipped. Okay, so we'll see. Sort of flattened out, made a movement. So we'll see what we do. But we do want to see what we do around the 257s, and if the buyers begin to increase around that level, and if we can get above that and get a little bit of acceleration to the upside here, maybe 263s. So that's what I'll be watching on Microsoft. Let's go over to Netflix. Netflix. What are we doing, Netflix? So this is a 12th, right? Netflix didn't make a lower low. So that wasn't one of the tech stocks that dipped. And that is interesting. So remember, we just looked at Amazon. Amazon didn't dip, making a lower low since the 12th. But come on up, big guy. You're back to dad. Did your guitar not work the way you wanted it to? Come here, bud. So, mm, so if we're looking at this, that's cool. Let's see if we I love when tech syncs. When tech is not synced, I don't like as much. That's just me. Hey, let me get these for you. Here you go. Get those out of there? Yep, I love to have my kids around when I do anything with the market. I really do. I apologize if it's disturbing for some, but I like them to look at charts regardless. I love it. Um, Sometimes it's a little bit noisier when I have them in the room. Sometimes they're quieter, but I love them. I love it when they're there when I'm trading. I love it. Okay. What's going on here? Where are we? Let us see. Okay. Here we are on this chart. Let's pull it together a little bit more. We get a little bit of structure to this and we'll see. Okay. So the last time we were in this area, it looks like the low swing was sort of where we reversed here, roughly about the 163s. Look at that here, going back to the 17th of August, or August 2017. Just look at August 2017, the 15th through the 29th, right? We sort of bottomed out around that 163. Buyers pushed us back up. And so prior in July, the 24th of July, we kind of hit our head around that 192-ish area. 190, 190. It's like right around 190, 191, 192, right in that area. We dipped. We sort of bought back up on the 22nd of September and hit our head roughly around those 190s again and pull back a little bit, but had a little bit more force to push through that level, right? And we pull back into it again. If you look over the corresponding weeks, pull back into that a little bit more. And we sort of had a little bit of touch and go around the 190s and even a peekaboo into the 200, the lower 200s here. This is looking back into this area here. So my thought is watch the 190s to the 200s and see if we sort of get a little bit of traction there. And you can even look here. It's what, 205, the mid 200s, like 204. Let's see what happens if we get up in that area. Nice little sort of higher low. It needs to make a higher high here, but we need to really pop this 204, 205-ish area. So we need to pop the 190, 192 area. Then we need to get up into that 200, 205 area, pop that 205 area is what we really need here. So that'd be great. So we'll see how that shakes out headed into next week. But I'm not touching Netflix much. Just not really interested. Not really interested at all. 1 second. Let me pause this while I get him situated. 1 second. Be right back. And I am back. Okay, cool. So looking at Apple, just on a daily chart. So we saw Apple here. There's a nice little gap in this area. This is old. This was a top there. A slight dip here. I just don't believe any of this, man. I tell you, I think it's tough. So for me, Apple needs to regain the 142s here, and then we have room to the 144s. We may hitch before that, but at least that gives us room to the 144s on Apple. So a regain of the 142s to me gives us a few points into the 144.90s, potentially maybe almost 145, but I'm waiting for that. I'm not really feeling any level of, let's see, in the 1 hour, boom, dip here. All righty. So remember what we were saying about different tickers, right? So looking at Apple, this is the 12th. Apple made a lower low here. So tech isn't synced. Some of these tech stocks are a little bit weaker than others. So for me, if I'm looking at this, yeah, we definitely want to get over the 140. So I'm watching the 142 area. Apple just no juice, man. No juice on Apple. There's just no juice. If you just look at it, I don't see the juice. It's just weak. So we'll see how this plays out. Remember, a lot of people have Apple, I believe, in their retirement portfolio, so that'll be interesting. We'll see. It's not my area, but we'll see if we can get like a little bit of a bid off this 137.20s area, right in here. Could we get like a little bit of a raise back to 140.73? That would be interesting. Everyone's screaming the bottom, the bottom, the bottom. We'll see, right? But that's what I'm watching on Apple. We can get a squeeze back to the 142s to be better. But let's watch what happens if we touch the 140s and if the buyers give us a little bit more here, if we make a lower low. So we'll see what we get on Apple here. Remember, Apple, the thing to watch with Apple is they definitely do well with their accessories, but yeah, it's in a previous video. I'm not going to get into it with with sort of the regulations around COVID being so relaxed right now. A lot of people are probably going directly into the Genius Bar, and there's probably a lot of accessories being purchased. So I think that's interesting. But the thing to watch with Apple, or that I would think to watch with Apple, would be their supply chain and where are those accessories being made, and is there a little bit of supply chain pressure that they're dealing with in providing those accessories to their consumers. And that's not something that I followed up on, but that's something that I think would be interesting with Apple, with sort of the what's going on right now and a lot of companies under pressure and the cost of materials being more. I think it's something interesting to watch with Apple. Over to Facebook. Facebook has, been stronger than most. This was the dip on the 12th. Definitely not back down there. Isn't that interesting? So Facebook's even different, a little bit stronger. So if I'm looking at Facebook, I would like from the 190s for us to go ahead and crest the 198s, then potentially get up into this 204, 205-ish area here, get above this, and then squeeze into the 210s. The 210s is the area I really want to get back above and just looking at Facebook. But if we were to flip this to the daily chart, look at more, more Facebook, which is, always a good thing. Let's see more. Show me more. Let's see here. Oh, Christmas tree. Oh, yeah, strange songs play in my mind all the time. That's just, you should hear me while I'm trading. It's ridiculous. Okay. So this dip here, 184 is interesting. All through here, right? If we look back at the 184s, we see some action on the 18th June, rough around this 14th of June, roughly in that area. 19th of June, those 184s were interesting. Then all through August, that was an interesting area. If we move forward, March 4th, 2020, roughly in that area, interesting again. So 184 to 190. So even this dip here into the 180s, we saw a buy up that took us up to the 230s. That's old, but that's still interesting. Back in March, this dip here, buyers didn't quite step in. We dipped below, then we gapped up, and we're back here right in the 180s. And buyers did step in, pushed us up. We dipped back down to 180s, didn't dip as low. So if we hold these 190s here, it'd be definitely good to see us get a push back into the 210s. That will be interesting, right? That will be interesting here. So let's see if we get that. If we can clear the 210s, that would be a beautiful, beautiful movement on Facebook. It's a little bit stronger than a few of the other tech stocks. And I think the pivot that they made into this is a previous video. I'm not going to get into it. I think it may be the last video or the video before that when I really got into Facebook and the metaverse and curation and their positioning and just what a good job they did, just opening up another avenue for profit, right? So that's good on them. And we'll see, but I will just be watching this area. As long as those 180s hold, do we and we can, we can kind of hold the 190s, that 191, 190 area. Can we see a squeeze up into the 210s? And that would be nice. So this is an interesting setup here, and I would like to see a squeeze minimum 210s right around here, this area here. So we'll see how that plays out. I'm not predicting anything, just waiting to see how this plays out. Everyone has a different way of looking at their charts. I would just think that'd be interesting if we did that. Okay, let's go over to NVDA. So, okay, let's drop this down off well, let's start with the daily and then we'll come back. Okay, so if we look at these lows here, 157, we have a line there, but there are also an area that was important before, nice little breakout area. So we're back to that. So it's like we're back to the breakout area here around the 157s. And this is the breakout happened the summer of 2021, it looks like, right? And so we're back to there, the summer of 2022. So if I'm looking at this, I see, the rejection of the lower, the push lower, right? But if we flip this and go to the 1 hour chart, let's look back on the 12th. That's the date we're looking at. We're basically back there. So this chart popped a little bit higher, but this chart looks the same of sort of what we did on the 12th. We didn't make a lower low. So that's interesting. So a little bit stronger than some. So we got to keep an eye on chips. And so if I'm in NVIDIA, I want to hold this 157 area and I want to float back up to the 181.90s. That's something interesting to watch. We'd have to get through this little consolidation right around the 176s. But it looks like that's something interesting to watch, that we may see a matriculation back up to the that 181.90s, 180 area, right up in here, 180.94 to 181.90s. So that's something interesting to watch on NVIDIA. That I'll be keeping an eye on. Let's take a peek over at Tesla. So these blue lines have been here a while. A few of you have them down. That's cool. So it would be great if Tesla could get down to these Sophie levels. That's cute. Okay. For someone, right? Not me, but someone who was a little bit more bearish than me, they would say this could be an M pattern and the neckline will be down here, or this the 24th of February, look at that, and we're breaking that. So we should get a sell of another 400 points, please. So we'll see what happens on Tesla here. Tesla's a little bit weaker. They did get removed from I think some index removed Tesla. There are a lot of people that have jumped out, just based on, there's a lot going on right now in the world. I'm not sure if it has anything to do with Tesla specifically, but if I'm looking at Tesla, I definitely want these 650s to hold. And it looks like we could see drift down to even the 616 area. We have to see what we look like next week, but we really need to regain the 713s, and the buyers really need to give us a pop back into the 780s. That would be interesting. So we have to see how that plays out on Tesla, especially with the weakness overall. And so if we were to drop this down to the 1 hour, and let's look on, where were we on the 12th? We were here. Tesla's a little bit lower. So Tesla's one of those tickers that's a little bit weaker than the rest. So I'll be watching the 651-ish area and seeing if we go back below that. And then if we lose the 634s, then we can target the 616s, and below that, the 580s are on deck. If the buyers can get us back above the 713s, they really want to try to break this little bit of consolidation here around the 734s and get us back into the 780s. That will be an interesting area. So I'll be watching Tesla for those levels and seeing how these things play out. What's funny is Elon could almost technically laugh at what's going on with gas and oil and things of that nature. It's not an area that I really want to get into, but it would seem to me, right, if the dollar is pegged to oil, right, and you have oil in countries that may not be friendly to the US, that someone like a Elon Musk may be the person that you would really, really, really want to bring in and really talk to about electrifying not just the grid, but also electrifying cars, and really move in a direction where your ability to operate as a country is self-sustained. So the price of oil will no longer deter. It's like we can almost disconnect. I know it's a weird thing to say, and it's like a, but it would almost seem like a thing that's almost as important as like a national security thing, to say, hey, oil is a big deal. We can't really control the prices of it. And this guy, Elon, and his electric vehicles and electric solar powered stuff could really put us in a position. And I don't know, what it costs to build that and change the infrastructure and rerun the law. I don't know. And how that would affect jobs and things of that nature. But I do know that a lot of the wars that we fight and a lot of the conflicts that we end up in, at the root of them is oil, and of countries trying to get off the of having to use the US dollar, or using the US dollar when it comes to oil. So I think it's interesting, and it's something that the government really should consider, and talk to the electric vehicle manufacturers, and talk to Ford and all these other companies, and say, hey, maybe we're going to move in this direction, and we're going to support that directional move in a lot of ways. And I know they've done some things with credits and things of that nature, but just support that move in a lot of ways where, and I think I know they did an infrastructure bill. That's something that I think would be huge and really take the country into the future, is electric. And not from an environmental standpoint or anything, but just from a national security standpoint. Oil is very volatile, and some of the countries that have the most oil are very volatile countries. And volatile is, I guess, as far as the US policy, right? And I think it's tough decisions, but you want to put yourself in a power position if you can. So not sure if it's possible, not important. Leave that alone, not my area. Sorry, big guy. Let me take a peek at the SPY, and then go get him, Tiger. Go get him, Tiger. There you go. Okay. QQQ. 275 looks interesting. We'll see if we get there. Let's see what happens around this 294 area. If we can get above it and get a nice little squeeze here. These are the power pivots that Lisa uses. It's her thing. So I'm looking at this. I want to see if we could crest 294 first, and then what we do around the 298 area. If we continue to dip here, I'll be watching for the 275 area to see if that's an area where buyers would step in, right? And one of the things you want to do is flip this bad fella to the daily chart and look back and see what happened when we were last there. And we do see a little bit on this low drift here. Let's see. It looks like we kind of need to get out of this area. Everything below the 300s, we need to get above that and really get some buyers in here to try to regain some momentum. Me, as long as we're making lower lows, I am not screaming reversal. And I know we didn't close lower, but we have to see how this shakes out. Me personally, I have to wait to see. Like buyers have to prove it to me. And looking over at the SPY, we have our line at 398.18. Got to get back above that. Let's see. Had a little interaction there. Another one there. Then we got through. This guy's getting into everything. 379, 378. Yeah. So if I'm looking at this, let's drop this to the 1 hour. This is when was the 12th? The 12th was here. And look at this. Boom, boom. This move up didn't quite go. Same setup, we know. So did make a lower low. So this last boom, boom. So it was like a lower high here. I'll look at that wave as that. Whereas on this tap, we went all the way up here to above 403, 407-ish in that area. And on this bounce here, we didn't quite do that. So we want to see if this will get up there. So this is interesting. For me, I think it's kind of weak. And I have to sort of check what the options look like and all that. And the people that do that I just check with them. But keep it simple, be careful. If you like this video, please go to our YouTube channel, Power of Pivots, and subscribe to our channel, where you can look forward to getting more videos from me and maybe increasing the pace of the videos, because I do want to go into some individual tickers and setups and things of that nature, or maybe on like a every week I'll have like a ticker of the week and I'll do some stuff around that. But you could also look forward to getting videos from Elisa on her Power of Pivot strategy, how she uses that pre-market, intraday, and post-market to look for great entries and swing plays. Thank you so much for your time. Have a wonderful rest of your weekend and have a wonderful trading week. Stay safe, and we'll see you next week.